Are you sticking with the forecast that stocks will rally and recover into the end of the year?
Into the end of the year, yes, I am, Sarah. I don't think we're going to have a recession. I think Ed's right, except it's already one of the worst years. You know, we're already down 20% in the NASDAQ comp as of today, I'm told. The Russell 2000 is down 20%. The S&P 500 is down better part of 14%. So you're in a situation where the market's already down so much. As you know, Sarah, we came into the year thinking it was going to be a tumultuous year on the back of monetary policy uncertainty, economic growth transition from buying stuff to doing stuff, which was going to lower production. So all of those factors are in play, and you throw in this terrible situation in Ukraine, and you get the kind of weakness that we've had. But I think it's important at this point, when the expectations for the Fed are to hike so many times into the teeth of this global crisis, it seems like a stretch to me. So I could see some pathway to a better environment toward the year end.
What about just the fundamentals that have changed and that nobody did expect, like oil at $120 to $130 per barrel, wheat prices soaring to new record highs? We were already dealing with an inflation problem. You don't see that as a potential game changer here, that we have this new surge in prices from everything from metals to food to oil?
Ultimately, so that begs the question: when is it going to hit profit margins, right? When are people going to spend less and not be able to afford anything? And of course, it's a horrible thing. And the problem with inflation, especially energy, is it hits the people that can afford it the least, the lower income brackets. The higher income brackets is not as much. Just to give you an example, as of the end of January, not even including the most recent ramp, if you look at the second lowest quintile, according to my friends at Ned Davis, if you look at the second lowest quintile of income, gas accounted for 10%, 9.7% of their incomes. For the top 10%, it was about 1.5%. So it really is skewed to the lower income individuals. And inflation, Sarah, the whole point is inflation has been with us. We've got it. If you look at the Fed funds futures relative to what the dot plot is, the market's been way ahead of what the Fed has been saying for quite a while now. So the debate isn't whether we have inflation, and we've talked about this on the show before. That's not the debate. It's there. It's obvious. It's what's going to happen into the second half of the year when you go through this growth transition, throw in some economic slowing from what's taking place in Europe, and maybe you won't get the Fed to be as aggressive as the market believes they will.